Good day, everybody. This is Dennis Wilborn. I want to welcome everybody to the Art and Science of Active Trend Trading update for the weekend of the 28th of October, 2018. Yeah, the year is going by quickly. All materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. I want to remind us about what our motto at Active Trend Trading is to basically clarify, simplify, and multiply. Today's session, I've got myself on the clock, guys. I want to be less verbose and more direct and to the point, trying to keep really honor your time, and thank you for watching and looking at this video. If you do like this video, please do just that. Like it, check off on the like box, and also recommend it, suggest it to your friends, saying, hey, if you have friends that are also interested in the market, it's a great place to get some of your basic kind of concept and ideas for the market. And then, of course, for people who want to learn more or trade with us, there's always a premium Active Trend Trader members. So what are we going to do in this one? Weekly update video to accompany the basic newsletter that's posted to the site. I talk about market technicals, potential bonus setups if we do have any, and other market driving events. I will typically tackle one technical or mechanical tip. Today I want to talk about simple clues to magnify the market weakness. I know that's kind of like an oxymoron or almost like a double negative, but there are tips that happen when the market starts to get weak that you can basically draw on to say, aha, this is how weak the market actually is. So what are some of the simple clues? And I will highlight that really quickly to you, and then we'll take a look at a couple of charts and keep things rolling. My objective, 10 to 15 minutes to honor your time. So simple clues to magnify to the magnitude of the market weakness. Well, one, when you look at stocks, let's say you have a favorite place you go for watch list that somebody else generates. Such as I like the IBD custom watch lists. There's about 13 of them. They're very powerful lists and typically show when stocks are doing really well. When the stocks are doing really well, that list is quite large, or those lists are quite large. When the stock market starts to weaken and really get weak, that list shrinks. I'll show you an example of that. Secondly, when the growth stocks start being replaced by older, more stable stocks, did you know this week the IBD 50, which basically is growth stock, was one of the stocks that was replaced in the list or brought onto the list was Union Pacific Railroad. Now, railroad isn't typically thought of as a growth stock per se, but when you start seeing a rotation into other sectors that are considered safe, that's a time when you can say, aha, the underlines or the belly of the market may be even weakening even more. What was that other item that we were looking at here? Let's pop up and take a look at, here we go. This is one of the favorite things I like to do. I provide this with this video on the website, and it's what I call the composite list. And what it is it grabs all the stocks that showed up on the custom list that IBD puts out, and I start looking up this, and as you can see, this, the 13th list was stocks in the move. The 14th, the one before that was Can Slim Select. One before that are relative strength new highs. And when you see these new highs, starting to shrink, it's telling you the market is getting weaker. And one of the ones that really highlights it to me is occasionally, if the market gets really, really weak, your big cap 20, there will not be 20 stocks on there. This week, of course, we are in fact 20 stocks on there, so that's good. But when the market really, 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 falls out of the sky and gets really, really weak, I've seen the big cap 20 go down to 15 and even 10 stocks. So that's telling us that weakness abounds. And then one of the other ones to take a look at, your weekend review. When that drops, the less than 50 stocks are about the same size as IBD 50. That's also indicating weakness. Stocks the funds are buying. Again, this is shrinking. This list here is normally, somewhere 25, 30 stocks. Move on down the road here. Let's move it back up. Rising profits, small list, and then global leaders. And this is okay, but one of the ones that I always look at, when the sector leaders, there's 90 plus sectors in the IBD series of stocks. Look at only 3 sector leaders out of all the sectors. That is showing absolute weakness in the market. So there's a little tip for you. And also IPO leaders. There was 2 last week. Again, when the list starts to shrink, stand by. It basically is trying to tell us something. So let's move on. We talked about this. You can find the IBD, the composite list is down to, it's showing some, some of the old favorites we've had on there before. Just keep a look on that. BA, another one of those stocks. What is BA? It's Boeing. I think Boeing, great company, absolute great company. But BA, yeah, Boeing company. So great company. However, is it really a fast-moving grower? Well, it was back, 2017, 2016, but here lately it's just been a kind of a up 20%, which is not a real high volume, up 20%. It's making nice runs, but it's doing a lot of bouncing around. The typical growth stocks, you're looking at, 30, 40, 50, 60 plus % per year. And again, for the year, go back here, looking about 25%. So in reality, not bad, but it's not your typical growth stocks. It's a little bit of a slower mover. And we talked about Union Pacific, which UOP, I think. Union Pacific or UPO. Nope. There we go, Union Pacific Railroad. Again, it's one of those, it's already dumped over the side. It's already jumped over the side. It is starting to recover here after earnings. However, is it some place you want to put your hard-earned bucks right now? About 17% move down. I'll wait. There we go. Get back over here. Okay, let's take a real quick look at the SPY. How do I highlight this to everybody? What I'm looking at, guys, is just basically, I would like to see capitulation. Now, what is capitulation? Is basically where capitulation is when you get the sell-off actually accelerates. So we had a nice little doji sandwich here on a weekly chart where where just a small body in between 2 larger down days. And what we had is basically a drop, doji, and then this week's price action comprised the rest of the doji sandwich, pull on down. Capitulation, what you think about with capitulation is maybe a move back up to about the 70 level. If we move back up to the 70 or even the 75 level, and then we get another thrust, hard thrust down, almost like pushing down, like even an overshoot. If it overshot down to 240 or 245, and then started another rebound there, that would probably get us a reversal on our weekly longer-term momentum. Right now, the longer-term momentum is still pointing down. So that's what we want to be looking at. I'd like to see capitulation. Any move up from the current lows right here towards the midsection of this past week's candle could be looked at an opportunity to get short this market. Q, same on that. Again, I've identified capitulation down to 160 to 150 level, just straight away from where it's at, or any retest back immediately up into the middle, 170-ish, might give us an opportunity to get short the Qs and or by the inverse leverage of TQQ, which I think is, I don't think it is, I got it written right now. Here, guys, that would be SQQQ. SQQQ. There we go. And again, that would on SQQ, that would be basically a pullback That would probably be a pullback to about the 1350-ish level, and then a rebound from there, maybe a little bit lower. So SQQ, last but not least, I'll talk about IWM. Again, IWM has done a little bit better job than the other indexes, and it has kind of reached its exhaustion lows more quickly. But as I look over here, what I'm seeing is, okay, on a weekly chart, I've got strong support coming in where it broke out from before. So that's about 142.50-ish range. So 142.50-ish to above. And so one of the ways to trade that, just FYI, is if we know that that's a strong support slash, where it had breakouts before and it was tested here, hasn't been tested since, but we're pushing lower, hits here, and if we move back up into the 155 range and then back down, that's going to tell us that, okay, hey, we're going to continue heading down. But I would be looking for one of two moves, capitulation down into the 142 or even down in below 140 with a move up. That'd be a continuation capitulation, or a move back up, which would be a potential failed rally attempt, and then a move back down. So that's basically what I have for this week. Guys, kept to basically just about 10 to 12 minutes. One of the things we are looking forward to also is a couple of items. I'll highlight those. There we go. And again, you can find the list. They'll be posted on the website under the Art and Science of Active Trend Trading update for this weekend. I want to highlight really quick, okay, be thankful for bear markets, okay? Everybody freaks out about, the bear markets and all that kind of stuff, and oh my gosh. Bear markets tend not to last long, and they also tend to provide absolutely phenomenal buying opportunities. And so I've shown this chart numerous times in the past, and I just want to highlight it to everybody, is remember, from the high to the low, more than 20%. When it hits 20%, that's when it's characterized in a bear market. But what have the time frames been? Okay, the one back in 2008, 1.3 years. 2000, 2.1 years. 3 months, 1.8 years. 1.6 years. 6 months, 6 months, 2.8 years. Bringing us to a grand total of bear markets, on average, last about 1.4 years. And then you get a rebound. So, and oftentimes the market is falling from its high. And so in reality, for the first, little bit of the potential bear market, you don't even realize you're in a bear market until you get down past 20%. It appears to just be in a correction. So just be aware of that. I hope you have a good trend trading system that's going to basically help you avoid losses during this time frame. I know the active trend trader, very pleased. We're in cash almost totally, except for the small strategy 3 positions that we maintain that we continue to sell premium against. Now, am I looking for some potential bounces? You betcha. But I'm also aware that anything that we do right now, unless it is a constructive base, will be a trade against the existing trend. It'd be a counter trend trade. So just be aware of this. Remember oil. Oil, looking for a continued pullback. However, oil may foolish this year. We shall see. It may actually get down to lows and then get a little bit of rebound and then fall off. But this is what it does seasonally. Russell and all the other indexes are approaching the end of October time frame, where you tend to get a bounce towards the end of the year. And then for members, hey, we are going to be launching the Market Action Points. It's a replacement for the Early Warning Alert service. It's a much more simplified and basically no training to it. It's just basically, we provide signals, a timing service for when to get in, when to get out, and it's done an excellent job of finding finding the bottoms of the markets, so going back to 2002, 2003 time frame. I'm very pleased. There were some limitations on EWA. We fixed those with maps, and the performance has shown, or the backtesting performance has shown that it's going to be an excellent system. And so very soon, you're going to get your opportunity to become a chartered member. You want to take advantage of that because it will be a one-time offer, lasts about 2 weeks, get you in a very, very exclusive price point that will never change as long as you're a member. So until next time, hey, always trade wisely and profitably. Take time to enjoy the journey and have a great weekend and a fantastic, we look forward to getting into the first part of November next week. God bless everybody. Aloha.